Hello, welcome. My name's Ash, and today in this video, I'll be going over a trade that I took today, or just now actually, and then I'll also be going over my new strategy and what I've been doing, like to improve my shooting. So, you guys may not know this, but in 3 months, I will be turning 18. That's when I'll actually be able to start my shooting journey. So, March 29th, by then, I am planning on passing this fake funded, right? So I just started this paper trading account, 50,000 first trade on it. Of course, this is the first one, and I'm trying to get it to 5,300, which would be the required amount to pass like a funded, obviously without breaking all the drawdown rules and all of that. So that is what I'm currently doing. So the next few videos will be about this, so it'll mostly be trade recaps and videos of that sort. So to recap the trade, it was a very simple trade. So uh took it right here just now. It wasn't supposed to really be like a trade that I was actually taking seriously. I wasn't going to risk too much. Obviously I went for like a 1 to 2, which is like the bare minimum. But if I lost this trade, I wouldn't have been really mad because I'm taking it at 4:25 p.m., which is about Asian session right now, and I don't trade Asian session. I usually trade New York session. So how it ends up right now is just kind of lucky. I don't know. I didn't really expect this kind of move to the upside, but I'll take it. So right here we had a liquidity sweep right here, and as you can see from the 200 SMA, we are bullish, and that's what I've been using to like determine like what type of trades I'll be taking. Even if we're like overall bears, like as long as we're above this, then I'm looking to take longs, right? So obviously we were above, and we had a liquidity sweep right here on the hourly and on the daily. We had like a huge liquidity sweep, and so I was looking for a fair value. Yeah, we built on just about right here, and that's where my entry point was. So that's it right there. Went for a 1 to 2, risking 300 to gain 600, which is going to be about my what is it called? Actual risk amount, because $300 if I lose 8 trades in a row, that is 2,500, which was I believe the maximum loss for a funded challenge. So if you go below that without messing up drawdown before that, then your account's pretty much cooked, right? But yeah, and then my uh goal is 600, and I think it's about 5 trades, like one in a row, that is 3,000. So as you can see, pretty simple trade. I was targeting this high right here, but I was only going for a 1 to 2, so I wasn't really going for like a full liquidity sweep right here. I could have gotten greedy a little bit, but it's just not worth it, because I believe in like just sticking to a singular risk percentage instead of going for like big wins like every time. You know what I mean? If you can stay consistent with a 1 to 2, or like a 1 to 3, something like that, 1 to 2.5, then it's way better than changing or fluctuating every time, because you can keep minimum losses, and you can keep your ones the same, and it's like way better. Even if you have like a 50%, a 1 to 2 is like really great. And basically my new strategy now is it's the same, right? So I did not change up my actual overall strategy, but now I overanalyze. So I know a lot of people say not to do that, because then you start like getting analysis paralysis, and then like you don't know what to do. But mine's a little bit different from that. So basically I start off on the daily, and if I look on the daily, right, we have to be above the SMA. So if we're above that, then I'm looking to take longs. If we're below, I'm looking to take shorts, no matter how the day looks currently. But I do have a certain like rules, right? So my strategy basically consists of liquidity, like lots of liquidity sweeps, and fair value gaps. Those are the main components. I obviously use like different biases or like different confluences. Like maybe I'll see like an order block, or maybe CISD, or CE or something like that, and I'll maybe take it. It'll give me like higher confluence, but it's not gonna be my main like trading reason, right? And right here, so obviously I'll draw out like draw on liquidity where I think market wants to go, or where I think it's at least going to reach like in the next day or two. So currently up here for gold futures, I'm looking for up here. Obviously, really close to it. I think it's gonna go and hit it like immediately. And currently on the daily, there isn't much to really look at. After I mark out the jaw on liquidity, I go on the weekly, and then I look for anything. So if I see a bearish fair value gap like this right here that has not been respected, or like has been broken out through, then I probably won't take a trade. And I obviously did not notice this when I was taking my trades, so that is also a downside. And the weekly is closing in, it's closing tomorrow, so after it closes out of this, I'm thinking of taking more longs. Obviously it does not look like it's going to break out. And then on the weekly, I will also look for any type of fair value gap that could really help us push up. And there's this one right here, but as you can see, it got broken, so it just doesn't matter. So I just stick to my daily, and if there's no fair value gap obstructing my bias, then I can take longs. And then I drop on the hourly. I look for any type of liquidity sweep, and as you can see, the trade that I took was based off of this liquidity sweep right here. And liquidity sweep is very important. I only look on it for on the 1 hour. I never really look on it on the 4 hour, but as you can see, we also had a 4 hour liquidity sweep, and then I drop to the 5 minute. So all of my trades are taken on the 5 minute. I know a lot of people take like their trades on the 1 minute or lower, but down here I basically look for a break of structure, right? So I don't want to take a trade while the market is still searching for liquidity, right? Like it wants to keep going, because you never know, this liquidity sweep could have been like just the tip of the iceberg, because it could have went for these two right here, or it could have even went lower. You never really know. So you need to at least have a break of structure. And if you're really patient, you can wait for a change in state of delivery, which would be about right here. So that's when like the market structure actually starts changing, and then like you can expect the actual move to the upside, right? But obviously I didn't wait for that. I took it based off of a break of structure, which we had about right here. And that was like right before the fair value gap formed, so that's even better. And then I entered right based on that 5 minute, and then I just held until it reached the 1 to 2. So that's basically how my new it's not really my new strategy. I've been trading it, but it's just more like improved, because before I wasn't really analyzing the market, which is like a really big flaw. I was basically just following my strategy like really blindly, and every single trade that I took could have ended up like in either way, just because I wasn't using any like higher time frame buys other than like where the daily is going. So like I would usually just look on the daily, and as you can see, the daily is bearish, right? Like it's currently bearish. It's not, it hasn't closed, but I would automatically just start taking shorts, like, but that's not the case now, because obviously with all of these other confluences and actual analyzation, then I can actually find like a proper bias. Because even though we're bearish right here, I took a long and it ended up hitting take profit. So it's just learning from like my previous mistakes. Because if I open up my journal right here, I went on to my, what is it called, every single one of my trades that I took on my Forex account. So as you can see, we are down to 33 on my Forex, and with the 34% win rate. And these trades right here, a lot of them were really stupid. So just going back and like taking notes. I didn't take notes on this one, but just taking notes on, did they delete the notes, or oh okay, I still have them. I wasn't able to go this far back because my trading limit, or like the candle limit on TradingView. As you can see, just going back in all of my trades, seeing what I did wrong, what I did right, what I'll do next time, and how I can fix it, stuff like that. And then you can see I've done it for basically all of my trades. Boom. And I just go back every day, like just review these, just see what I did wrong, what I did right, and like common like occurrences with like my winning trades and my losing trades. So I'd like check out like what went right if I won, and what went wrong if I lost. And then I would write that down, and then like I'll compare them to my wins and my losses and see like what adds up, right? Because most of the time when you take a loss, it's mostly because of the same issue or like something similar, right? So that's what I did right here. So that's why I changed up my strategy a little bit. It wasn't because it was like bad, but because it needed like some work on it, right? And I needed to know when to not take a trade and when I should be taking a trade. But that is basically it. Thank you for watching.